ACC, the cement giant, staying ahead and moving up. Over last 18 months, it has consistently moved up, giving a return of 141% from April 2020 to October 2021. But its performance in comparison with peers of its size and NIFTY have been a bit disappointment. It has underperformed the NIFTY by 41 to 51, while lagged behind Ambuja and Ultra, the other two big players. The price movement of ACC for the past 6 years makes an interesting study. Its CAGR of remote years is quite low, whereas for the past 3 years, the CAGR has consistently moved up year on year, suggesting the trend is up. And this helps us to make out what are the reasons ACC prices shall move in one direction in the near future. I am Vittal Prabhu, presenting you the weekly video on Stock Learning Simplified. I hope you will find the video quite informative and effective. ACC has been quite strong and conservative in its performance, but its revenue growth was dented by COVID in the latest completed year, but the profitability has kept its pace. It has moved to 10% in the latest year, and also the EBITDA percentage, which has just moved up to the level of 17%. On the whole, both revenue growth as well as profitability are quite impressive and sizable. In the background of marginal improvement in the installed capacity of the company, taking the impact of COVID into account, capacity utilization appears to be normal, although there is a small fall in the latest year. ACC's strength is its performance indicators, which have been consistent and strong, be it realization per ton or the EBITDA per ton. ACC sits on a strong cash balance year on year, courtesy its operational free cash flow, which is quite sizable, providing for working capital changes and dividend. It generates a hefty surplus year on year of the range of around 2,000 crores, which takes care of its normal fixed assets to be funded by internal accruals, and that gives it the leverage to go for capacity expansion as required when required. Strong operational results. Financial discipline has taken the net worth higher and higher year on year with the least amount of debt. And satisfying thing is ROCE has been quite impressive except for the recent year. The company's balance sheet is quite solid and reflecting the great strength of the giant. ACC is conservative but very consistent in its efforts, be it upgrading the technology, diversifying, or going for cost control and optimizing all avenues of cost regulation. And this is reflected more in the latest 3 quarters, wherein the TTM NPAT has moved to a higher level of 12.5%. No wonder market with its ear to the ground always has grasped this, and it has resulted in a sudden up move, and better things might follow. Joining the world leader Lafarge HOLICIM in 2005 has been a great thing for ACC, that too in the company of Ambuja Cements, and it has immensely benefited from the technological strength of Lafarge as a global leader in building material, and the results are for all to see. ACC's achievement is once again exemplified by the increasing stake of FIIs, which has moved from 6.6% to 13.6% during the last 4 quarters. Of course, it has come from liquidation done by the mutual funds and also other DIIs. But the fact remains, ACC has caught the attention, interest and investment of FIIs, which is a great positive. Cement industry is quite conservative. It is spread across the country depending on the area it serves, evenly distributed, although its concentration is a bit more in the southern part of the country. But on the whole, distribution is based on economies of logistics. Recently, the governmental policy and impetus for housing and real estate, which gives major demand requirement for cement industry, has come as a big support. The projects of metro freight corridors are adding to the requirement further. Cement industry is going to be the major beneficiary of this policy impetus, and that is where the industry is gearing up to raise its capacity to deliver on time and be in the race. And this is one of the reasons why cement shares have caught the attention of the market. Over years, ACC has suffered and has been thrust with a lower price earning multiple. Starting with its high of 40 plus, it has come down to half, to the extent of 20, and in the changed scenario and improving performance, market finds value in ACC in terms of the growth potential readily available in it. Over years, ACC chart is a classical textbook case of stability, fall, and then rising up from the ashes. And the rising up in an ascending channel started from April 20, and it continued the momentum even an year thereafter, April 21 and onwards, and we find consolidation happening between August and October, and post consolidation there is a breakout which has happened on 8th November with a big candle indicating breaking out with force, but volume was not visible. The daily chart of ACC is quite optimistic in its presentation. The big candle which occurred on the 8th is harbinger of hopes and commencement of a new trend if supported by volume. 20 is crossing over 50, 100 and 200 looking up. So also the stochastic RSI, although it is in the overbought zone, it is moving in upward direction. Coming to MACD, it has turned positive with a firm crossover. OBV, the trend and the direction are all upwards. A combination of these indications make the chart of ACC look optimistic and bullish. Option chain indications, although short term, with an ATM of 2520 and a strong support at 2500 and a resistance at 2540. Although the total built up is more at 2400, 2500 is the happening level, as there has been major change in open interest at the level. While it is too early for the option chain to give any firm indications, at an ATM of 2520, pain gain point is appearing at 2400 with a positive bias, but premium decay is clear and strong that it is premium getting costlier above ATM levels, a sure sign of bullishness. ACC, a company with a strong growth behind it, supported by productivity, dominant net worth, growing year on year. Government thrust on housing and infra opens up avenues for cement sector growth. Global parentage gets it the support of strong technology from HOLICIM. Investor trust evident in FIIs backing with additional inflow. Bullish indications from technical indicators and the ascending channel. The company is known for its benchmarking, strong governance and solid fundamentals. Hope you liked the presentation. You can access similar presentation with rich content at the info card on Stock Learning Simplified, and we look forward to your like, share and comments. If you are visiting the channel for the first time, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your time, support and interest. Disclaimer: this video is for the purpose of information, education and awareness only. This is not a solicitation or recommendation to buy, sell or hold securities. Please seek the advice of a competent professional wherever necessary.